What's up, everyone, and welcome to the daily macro update for Tuesday, March 3rd. A little bit of a sell-off here in the markets, and if the S&P 500 closes where it's at right now, then it'll officially go to bearish trend in our model for the first time in quite some time. Although, um, the S&P 500 right now, it's pretty interesting looking at the price action. I mean, it's been a little bit of a stressful time if you're someone who likes to actively trade this thing, because I mean, pretty much since the start of the year, it's just been zigzagging. So, yeah, quite the interesting, traders environment that we've been getting so far in the markets in 2026. Looking at the percent change year to date, though, I mean, that would bring the S&P 500 total to negative 78 points, which is definitely not the start that most people wanted for the first quarter of this year. But it is what it is. And today was an interesting day because even the things that my team and I were long had a little bit of a correction, except for energy. Energy was one of the main sectors that performed well. Continues higher here. And so that has been a performer in the portfolio. And you had a little bit of a selling opportunity here. But we're going to get into the charts here as well as some of the different headlines that we're seeing. Not much in the macro data came out today. I think there was only one thing with economic sentiment, which went down, which is pretty much expected. But, we're pretty much hanging on some of these headlines here, which, isn't necessarily a way to track the rate of change of things. But when you get days like today, instead of panicking, there's a specific method that my team and I like to do in order to make sure that we are buying dips in things that require buying dips in. And of course, with the volatility index spiking, we want to be cautious on some things. And so we'll go over that as well. But if this is your first time here, welcome. This is Macro Optics. We take a look at the markets from an unbiased, data-driven macro perspective. And typically, the way that we look at things is that a lot of these headlines that come out, it's pretty much after the fact, after a move has already happened, right? People are talking about oil prices right now, but when you take a look at a price chart of U.S. oil, I mean, this thing has been bullish pretty much since the end of January, right? So if you were to catch this, you had 1, 2, 3 opportunities to buy dips in oil before it had its large spike here, with it being in bullish trend. The preferred ETF that my team and I like to track in order to have exposure to oil is USO. Taking a look at the trading ranges here. Once it went bullish in our model, you pretty much had an opportunity below the midpoint line on January 22nd, February 2nd, as well as February 12th through the 17th, as well as briefly on February 26th. So there's been a couple of different days, or a couple of days where or a couple of consecutive days where you had some buying opportunities in oil. Today was definitely not a buy day. Today was more of a sell the news type of day. So hopefully you guys were doing that, having some exposure there. But yeah, some of the biggest moves that were happening on the other side of the trade, specifically with silver and silver miners, as well as some copper. Those definitely took a hit today. They still remain, in a bullish trend here, but definitely not what you want to be seeing in terms of accelerating volume on price drops, right? So interesting seeing that, as well as with the dollar accelerating to bullish trend here. A lot of the emerging markets that we've been making some good money on over the past few months, those are, a lot of them broke trend. And so that's why it's been important to take profits when we're near the top end of the trading range. We can take a look at, let's see here. We can just take a look at something like EWW, which is Mexico here. As you can see, this thing has been on a pretty decent run, pretty much since the beginning of December of last year. And then once it got to the top end of the trading range here, if you were, employing our process, that's where you would trim some down at the top end of the trading range there. Well, then you wouldn't have to have too much exposure to when it has corrections like these. Mexico still remains in bullish trend, but obviously with something like today, where it has a huge price drop on accelerating volume, that isn't necessarily the time where you want to just end up buying a bunch of it, right? Especially with it about to close below the low of the trading range there. Um, yeah, and below the purple optics alert zone, not necessarily a huge buy signal to buy back on EWW. So that's an example of, you ride the trend up, you sell some, even though you don't sell all of it. Now that it has broken its trend, now you can just get rid of it and you can enjoy, the mini profits, that you had gotten along the way here, right? So that is essentially how we enact our process. But for those who are new here, or a quick reminder for those who have been joining, if you want to learn this type of process so that you can implement it yourself, as well as you don't just want to do this live, but you want to do this with my team inside of our community, we are currently still having our macro, uh, our 6-week macro mastery challenge, where essentially you're 6 weeks in our premier investing community called the Partnership Circle. That's where you learn our process, trade alongside of us, as well as learn everything with macro, and really understand the markets through the lens of how we view things and how we present things on this channel every single day. So you also get daily picks, our full morning briefings every single day. You also get our full list of selections for this market cycle. And so if you want to walk through that exact macro process, you can do so within this challenge. And yeah, you don't have to worry about saying, am I missing something? Am I doing the right thing? We're there right there to help you through it all. So take a look at the challenge link in the description below for those who are on YouTube. For those who are on Instagram or Twitter, you can take a look at the link in the description below. Just hit apply now, book a time, and we can talk about it more on a call there. But getting back to the markets here. Yeah, interesting day with the dollar ripping as it did here. Definitely a change from what we've seen over the past few months. And yeah, these different market changes can happen. What's the main differentiator between other sell-offs compared to what we're seeing right now is that we are finally getting credit spreads widening, right? So beforehand, whenever we had dips, there wasn't too much of a large acceleration in credit stress, right? But now that we are in this phase where we are having market sell-offs and this is rising, although it's not at extreme levels yet, it has had a near-term acceleration. And so, with that happening at the same time as bond volatility going to bullish trend, as well as the volatility of the S&P 500 well above 20, and I think at the pinnacle today it reached what, almost 30, 28. Yeah. So when volatility is doing that, my team and I aren't super eager to just take a bunch of money and throw it into things. You want to be a little bit more cautious when it comes to that. As well as we continue to get more stagflationary types of condition sets happen. And you can just take a look at one of the real-time ratios that my team and I like to track, which is commodities, or the commodity ETF GSG versus the S&P 500 ETF SPY. This is one of our real-time ratios that we like to call, where you take two ETFs and you essentially get a proxy for a certain type of market signal, which for this one, it's real assets versus paper or risk on assets. And so commodities have been outpacing the market. Inflation has had a little bit of an impulse here at the beginning of 2026. And having exposure to certain commodities has been allowing you to hedge yourself against some of this inflation here. And so when you take a look at a price chart of GSG, I mean, this is similar to what we see in gold and stuff like that, but this has continued to have a pretty decent bullish trend. Precious metals today took a little bit of a hit as well. Gold, silver, platinum, palladium, all of them, as well as copper, taking a bit of a hit there. And yeah, I mean, if anything, still kind of just waiting, only because gold's volatility is starting to rise right here, right? So I mean, I'm not in a huge rush to buy gold, even though, you could have bought a little bit today. But, if you're super long term bullish on gold. But when I see gold volatility doing this type of thing, it also doesn't make me want to rush into just, buying a huge heap worth of gold here, right? So the name of the game today was just to see what happens with all of the craziness that is going on. And luckily, if you've been, you know, taking profits and raising cash, as you've noticed, the volatility of everything has been rising, then you're okay. Although, I don't know anyone who's had a net green day. The portfolio is definitely looking like it had a nice little correction there, but it could have been much worse if you had full exposure to equities and things that everybody owns, right? So it's good to have a diversified portfolio where you have exposure to commodities, precious metals, and select equity markets that are still, even though with this little bit of a deceleration in the markets today, remain in a bullish trend. Things that I'm talking about are energy, staples, utilities, materials, industrials, as well as, did I already say staples? As well as real estate. So you still have plenty of different bullish sectors, right? So out of the 11 sectors in the S&P, we have 1, 2, 3, 4, 5, 6, 7. So 7 out of the 11 sectors still remain in bullish trend, and nothing has really changed in terms of that capital rotation, right? That's the overarching theme that we're continuing to see. And with this red day today, although it's still negatively affected the mega cap tech stocks as well as the S&P 500, which is heavily weighted into those into those mega caps. It hasn't changed the structure of the things that have been materially bullish, which are the 7 out of the 11 sectors that I just discussed, that I just showed you, that are in bullish trend. And so you had some buying opportunities with those. Um, Volatility had a little bit of a crush downward towards the end of the market here. It's about to close in about 2 minutes, but getting some news here with oil prices easing after Trump says the United States will ensure that these tankers or shippers can still transit through the Strait of Hormuz. And so, the strait is one of the major components of global shipping routes. And so, with this remaining open, it's kind of easing some of that uncertainty and some of that tension, and that's what we're seeing here today. So, yeah, pretty crazy here in terms of the market volatility. Um, yeah, when you take a look at some of the different heat maps here, you can see nothing but red. A little bit of green here coming up, but you know, nothing, mostly in the red here. Microsoft and Palantir. That's interesting how that's been going up a little bit. All right. Yield curve, nothing has changed there. That continues to flatten, mostly due to this bear flattening trend, which is where you have a deceleration of the long end of the curve more than the short end of the curve, which, that type of bull flattening is typically showcasing a hawkish pause, US dollar rising, safety bid amongst a global slowdown, that type of thing. So that's what we are seeing there. And yeah, nothing has really changed except for credit spreads widening a little bit more, as well as volatility making new cycle highs, or new local highs, I should say. So yeah, with the dollar going bullish, though, that's probably the main development that you should be paying attention to. So yeah, defensive rotation continues. And that's pretty much what I have for you guys here today. We can go ahead and go into some questions here. Someone's at my front door ringing the doorbell. Let me see if I can go answer it real quick. Is there a way to pause the stream? I'm not sure how to pause it. 1 second, everyone. Hey, everyone, just 5 more minutes. Sorry. All right. Sorry about that, everyone. Yeah, someone popped by unexpectedly there. But anyways, appreciate everyone for sticking by here. Let's see. Yeah, so I mean, there isn't really much to add. So we'll go ahead and wrap it up there, everyone. But I appreciate everyone for joining, and we will catch you in tomorrow's daily macro update. Bye, everyone.